Hello everyone, hey, good Saturday morning. This is the Cowboy and welcome to episode 27 of Bitcoin and Ethereum Wave Analysis. Let's get right on to it, guys. You can find me on Telegram. There's a couple of places here. There's a public chat, there's a premium channel as well, and then on Twitter I'm at Elliott Cafe. Let's get going. Last time we've talked must have been, I think, about 3 weeks ago, and Bitcoin wasn't doing that well. It's been, testing that 29,000 support, and I think, in one of the comments was, hey, what happens if it doesn't break? And sure enough, we've turned and we started to get a little bit of a sharp rally here towards 41,000. So here is a look at the 1 week chart, a little bit scrunched up in here just so you can kind of see the larger wave count. So overall, I think this is a wave one cycle, and that has been completed in December 2017, followed by a large second wave correction that took almost 2 years to complete. We've run out of that correction at the end of March of last year. And since then, we've done a pretty nice impulsive rally all the way up to 64,000. And this was somewhere back in April. We finished that first sequence. We are pulling now into the second wave that should lead us into the next larger phase in Bitcoin, going towards 200, 300,000 and above. So to me, this is becoming more and more my preferred count. And I think it has a high chance of success, even if this wave 2, let's say, it's not fully completed just yet. So I wanted you to kind of have a pretty clean picture. This year it's the end of 2023, right? So, there's still plenty of time. This whole thing might take another few years down the road, maybe up to 2025. So another 4 or 5 years into this kind of next cycle, going up and eventually, reaching the 1 million mark in Bitcoin, maybe by 2030 or so. So this is just a little bit of a larger picture so you can see. Let's jump over to the next slide where I have a 2-day chart where I show you where the end of wave 1 cycle is here at about 20,000. Pullback here in this very nice WXY, followed by this nice impulse into this wave 1. Now, for a while, we were thinking that possible this correction that happened back in here. Let me just kind of get my marker. This correction that kind of happened back in here, it's part of this larger advance, and it doesn't seem to be the case. I think that this whole move in here, it's on its own terms. So that's why I'm looking at it as a second wave decline rather than a fourth wave, right? Because you could have looked at this as being a wave 1, a wave 2, a wave 3, some kind of a fourth wave formation, and a pullback in another move up high, and a rally in another move up higher here. I'm putting that kind of on the back burner for right now. I'm going to go with this as being the primary one. And, I'll continue to kind of favor it going forward. I think it's got a better proportionality, a better look. Now, this wave 2, it's possible that it's not fully complete just yet, right? So we're having, just the initial decline into this wave 2. We're pulling up here into this wave B. And then we're going to sell off again and complete this wave 2 a little bit lower, maybe towards a retesting of this 20,000 level. No way of knowing, really. It's the market's decision, obviously, what's going to happen from here, if it has enough strength to continue to kind of rally upwards. But I wouldn't be surprised if we're actually turning and testing this, and it's going to be totally fine. I think it's going to give you a very, very good opportunity to kind of get involved. Maybe even a little bit more aggressive into Bitcoin purchases down into those levels. So but maybe the market, it doesn't give us that chance, and it just says, you know what, I think I'm ready to go, and there's not much you can do about it. We did purchase Bitcoin at about 31,000, a little bit early, right on the decline. But, it took a little bit of a while to kind of form this base at about 29,000. So let's see what happens from here. Now, I want to show you a little bit, and then we'll jump over to some smaller time frames, but I do want to show you a little bit on the weekly moving averages, what's going on. So, we kind of had our eyes on that 50-week moving average, which is a very good support, once the market starts trending. And we've only kind of tested that I think this is actually the first real test of the 50-week moving average ever since we kind of broke above it. Let's say, last year in the summer. So right now we're actually back even above the 21-week moving average, which is the kind of a shorter term trending average. So things are starting to look interesting, definitely from the moving average perspective. The 200-week is far below at about 14K. That continues to kind of climb, and that's the much longer trend that we're following in Bitcoin. And then if you look at the daily charts, we have some possible some hiccups coming up here, because the 200-day it's at about 44,700. It's not far above the current levels. You also have a pretty good trend line coming up from these. I don't know why I cannot. I'm sorry, guys. I'm trying to kind of get the marker to work in here, and I have issues with it at the moment. So I'll just kind of leave it at that. But you can imagine, right, you can kind of see the trend line coming up from these highs, and I'll have it in a couple of slides below, where you're kind of pushing it down, and we're kind of starting to hit those levels. So you have a very nice 50% retracement of this whole decline. You have the trend line coming in from those highs, and then you also have the 200-day moving average at those levels. So it's fair to assume also you have a very sharp rise into the RSI. So it's fair to assume that actually this is here, let me just kind of fix this up, that this is a pretty good area where you could start to see some sellers coming in, right? If you were, for example, a buyer of Bitcoin at about 41,000 or 40,000, and maybe even at 30,000, let's say that you bought a little bit late, maybe you even bought at 50, and you were kind of waiting for a little bit of a relief rally to say, listen, I'm out of this game, I kind of don't like it, it's not for me, so you just kind of get out at these levels. These levels are kind of ideal for anybody that kind of wants to unload on their Bitcoin on this kind of retracement, thinking that, hey, this thing could get lower. So this is always the risk when you have a decline and then when you have a pullback, right? It's a similar story that happened here back in January, but the market continued to climb back up higher, and it could be very well the case this time around as well. So let me show you a little bit also what's going on in terms of the candlestick patterns. And this is a 1-month chart, and we're closing tonight. I think we're getting a pretty interesting, bullish development out of this monthly candles. Now it's not, a super aggressive. I would have liked, let's say, for this to kind of push higher here and go towards maybe 55,000 to kind of give us more of a bullish formation out of these lows. Obviously, it's still very early. Maybe we're going to get into the next month. But, we're definitely not out of the woods. We are climbing back above this trending channel. We broke below it. Now we're kind of back in there. And this would be definitely an interesting close. Now, it's not a fully, bullish signal out of it, but it's definitely better than a continuation lower following this massive decline, this huge bearish candle that was in, what was this, in May? I think it was in May, right? April and May, June, July. So something to definitely keep an eye on this close and see if we're going to be able to get a continuation higher out of this one. Now the next one here, it's the 1-week candlestick charts, and you can see how we've tested this 28, 29 levels, several times. We weren't able to, the market was ultra bearish going into this, expecting a full break and taking us lower back towards 20,000. And the sentiment was quite extreme into these levels in terms of, this looking like a head and shoulder, and, all hell is going to break loose in Bitcoin moving lower. And it felt like that for a while, exactly the last time they tried to break that 29,000 level, and it couldn't. And then the moment that, created a small double bottom on there, and it was up onto the rally, just about a $10,000 move out of there. So now we're kind of coming back, retesting this broken channel, and we're trying to kind of climb back above it. Like I said, I think we still have a little bit of some hurdles up here, but the more we continue to push higher, the more we're going to break to some of those levels. And, definitely if we're challenging back the 56, 58,000, I think we're going to be on our way to rallying towards 100,000. And, a lot of traders were waiting for this 41,000 level to get broken to the upside to start to pick their interest again and say, listen, the bearish move might be done. Now I want to get involved again in Bitcoin. So interesting to see what's going to happen. Now, a couple of slides here coming up in terms of some correlation, and then we'll jump over to some smaller time frames. But something that I've been taking a look lately here in the past couple of weeks was this correlation between Bitcoin and copper. And it's super awesome because you can see in here how basically shows you how Bitcoin is actually a proxy for for risk. I mean, copper is well known in its kind of being a leading indicator on the economy and of the risk appetite that people take. And ever since obviously March of last year, it's been just in a ripping bull market. And you can see how Bitcoin has been tracking that as well pretty closely. And the next slide here, I'll show you the kind of a correlation with some other markets as well. But keep an eye on this correlation with copper, because I think it's so far it looks really, really good. And Bitcoin seems to be a risk asset overall. Like, people just want to own cryptos and Bitcoin and Ethereum every time they're excited about taking on risk and the economy opening up and moving forward and new things developing into this field, right? And then every once in a while you get this kind of setbacks where bad news come on, the growth is slowing, whatever else happened that seems to be the narrative at the time, or the trigger for people to get scared and move on into a risk off kind of mode. Then Bitcoin will sell off, copper will sell off, and then obviously the equities and so on and so forth. So far, Bitcoin is still trying to establish, I think, its role in the larger asset classes, but it's definitely not a risk off asset, right? So you're not buying it when stuff goes down, right? When shit hits the fan, you're not necessarily buying Bitcoin. You're more likely to kind of sell it and go to cash rather than own Bitcoin. Although, it could very well work on those perimeters as well. So, keep an eye on this relationship with copper. And here is the next slide here that kind of shows you a few more asset classes. So you're looking, obviously, you have Bitcoin, you have copper, and then you also have the S&P 500, and then you have the 10-year yields. And you can notice how all of them, move higher here as the risk gets piled onto it. And then every once in a while, like from March to April, you were starting to pull back a little bit in here into some of these, just as, some of this, let's say, the Delta variant and the reopening kind of slowing down. You have a little bit of a fear of an inflation, things of that nature that kind of put a brake onto these, onto some of these markets. Now, they didn't do it on the S&P 500. The S&P 500 continues to push higher. I talked about it, I think, a couple of weeks ago into the macro updates, but you can notice how all of these are kind of trending into the same direction. For a while there, Bitcoin and the S&P 500 were actually diverging. You can see in here into this blue line was Bitcoin, and the S&P 500 continued to push higher. And when I've done the last episode 26 on this presentation, I was kind of concerned about it and say, hey, something here I don't like, because either the S&P 500 has to come lower or Bitcoin has to come ripping higher to kind of get back into this kind of correlation mode. And fortunately for the crypto holders and for Bitcoin holders, it was actually the Bitcoin that started to pull back higher. So for right now, this correlation starts to get again towards like 70 to 80%. And pending a continuation higher into the rally into the fall, Bitcoin should continue to move. Now, if we're finding resistance up into these levels, with some who knows, maybe let's say the news from the earnings of this quarter are not that good, or whatever narrative is out there, and the S&P 500 starts to sell off, then we're probably going to get a leg lower in Bitcoin as well into that C wave. The 10-year yields are fine. I mean, they've corrected. I think we've hit major lows back in here towards these levels in here, about 30 basis points or 40 basis points, and now we're at about 124. To me, this is a correction against the trend. I'm surprised that we're actually not a little bit higher with all the the inflation numbers that come out of the economy at this point. But I think this is just probably gonna maybe kind of go sideways for a little bit and then push back up higher, continuing to kind of get into that risk on mode. So now on to a couple of smaller time frame charts in here where, so you can see, I have it here into our pro trading room. We're looking at this as a blue count, and then I have the next one here, which is the red. So two kind of working counts at the moment, both looking at it as a second wave pullback until anything kind of changes. But, looking at it as a move from the highs, you can see a 1, 2, 3, 4, and 5 in this wave A. And from here, you kind of get a three-wave setback. And we've talked about this. We actually tried to long Bitcoins a couple of times in here as this correction was pretty painful and with a very low volatility and just kind of dragged itself along. But, we could smell that, something is about to happen, fairly soon as we were kind of climbing. I mean, we're kind of declining from those levels and not necessarily having a super impulsive move. We try to look at it as a WXY. I think this is maybe more of a clean flat correction where you go in a wave A, down in B, and then up in this kind of sharp C wave to complete this B wave. So this will be a 5-wave decline of the highs in the wave A, up in B into the 50%, maybe even higher towards 47. Although at that time, the look of a flat starts to be a little problematic, but you can see the trend line that I was talking about a little earlier, the fib pullback, you have the 200-day moving average as well. So, plenty of reasons for anybody that wants to sell at these levels to kind of pound onto this market. And it remains to be seen how strong that is, right? How many people actually, want Bitcoin to continue to push higher, and, how many are going to borrow and sell it, whatever. But that would kind of tell you that it's possible that we're going to push back up higher in this leg C, come back towards $20,000, right? So that's kind of the idea of this blue count. I'm not saying it's going to happen, I'm not necessarily betting on it, but I am aware of it, and I cannot ignore the fact that that's a very viable probability in here. Now, on the bullish count, on the red, we're looking at this as a wave 1 complete. You have a W, now you have a nice X in here, just a nice corrective move, just a complex move. Then you have a sharp drop in the wave A, up in B in here, nice ending diagonal here in this wave C, followed by a sharp advance. Now, if that's the case, and we're completing a WXY in here, now you're having a nice impulse in this wave 1 of the next leg higher, wave 1 of 3 of whatever, right? So you go up in this wave 1, could be near completion because we're approaching those important levels I was talking about, followed by a second wave pullback here towards 35, towards 36. I think also the option market is looking for those levels here in the first week of August, maybe until August 27, something like that, for a little bit of a pullback into the 35, 36 area. And that would be kind of the level of maximum pain for those option holders. As the market pulls back, the most amount of people will kind of get hurt in a second wave. And then if this happens in a nice 3-wave decline, then from here we're looking higher, in a larger third wave. So for me and for our members into the pro room, that's kind of what we're waiting for. We're waiting to see if we're going to get a second wave pullback, how does it look, and then start to initiate some nice longs out of these levels to try to break above this channel. If you want to wait for a more confirmation, wait for a decline and then a push back up higher to break through it, and that's even a better signal that we're probably going to push higher. So a couple of ways of skinning this cat, depending on how much risk you want to take and where you're going to put your stop losses and stuff like that. But we're talking about this every single day into the pro room, about this kind of relationships between impulses and corrections and where the stops go, and what's a good trade, where you got to wait, because the markets will always kind of try to pull you into their drama, right? Hey, it's going up, it's going down, what am I doing? So we're not we're not doing that, because usually emotions kind of drive you to make poor decisions, right? So let's take a look here. I'm still slightly concerned. This is a chart, I haven't updated this time, but it's pretty much similar. This is a chart of the seasonality that I showed you guys also, a couple of weeks ago there. We're getting into a couple of bad months for cryptos in general, for Bitcoin, with the month of August and month of September being, some of the weirdest and some of the poorest in terms of performance. So I'm kind of cautious about that. I hope the market will prove me wrong in here and just say, listen, no, we're not doing that this year, and we're kind of climbing back up higher. But I'm just kind of showing you what's there in terms of seasonality, at least since 2014. So it's something to kind of keep in mind in this kind of correction that we're thinking it might happen, towards the downside a little bit. So we'll see what happens. Just kind of reminding you of this. And then the good news is that then after you finish the month of September, then maybe you can start the larger rallies into the end of the year. We all know that kind of October, November, December, we have that nice kind of end of the year rallies, and even the option market is kind of looking, hey, maybe towards 90 to 100,000 in Bitcoin by the end of the year. It could be a little aggressive, but hey, I wouldn't mind it for sure. Now, I think we're coming here towards the half of the video. So guys, it's important that you subscribe and you like and that you like the channel. I don't know if you haven't subscribed yet to my channel. I don't know what you're doing, So if it's the first time here, go ahead and hit that button. I'm going to try to be more active, put more videos out. I have a bunch of list of things that I want to talk about in terms of wave counts and psychology and trades and stocks and things like that. And I'm kind of working in getting a little bit more aggressive on YouTube. I've been a little bit, sluggish here into the summer because, I've done quite a few trips, and I'm trying to take advantage of the very nice, weather, and just kind of spend time with the family as well. Also, hey guys, listen, if you want to come into the Pro Room, this is what you're getting in there. There's a 7-day free trial. It's awesome. We have a bunch of guys there, and I have daily video updates. We're all over it on Telegram, talking about counts and all kind of things. I'm fairly available during the day all the time, and you guys can ask me any questions. But it's an awesome room. I love it, and there's a lot of information there. I guarantee you come and you spend a couple of months with us at least, and your trading will drastically improve, and the way you kind of look at the market. So give that a try. Okay, jump over to Ethereum, and Ethereum, it's a little bit of a beast in here, and it's it's got some weirder setups. I have a couple of counts on it. So one of them, that's a wave 1, 2, and then a 1, 2. So it's a similar story with Bitcoin as well, because the other one, it's like this, right? That's a 1 and that's a 2. So at the moment, it doesn't really matter, because you're looking at that as in terms of a longer cycle development, and reading this into 4 or 5 years into the future. Okay, I'm thinking it's going to go up, and it should continue for this platform to develop and get more people involved and get that super scaling. That will probably push Ethereum towards 10, 20, 30,000, who knows, in the next 10 years. So only then you really care about that's a cycle, or that's a primary, or whatever, or a super cycle. Until then, we're trying to kind of continue to push up here in this impulsive moves, and we're kind of, at the moment, we care, hey, what happens here? Is this a fourth wave? At which degree of trend? Is it an intermediate? Is it a primary, fourth wave? What's going on? And I'm okay with both. I was worried for a while that this fourth wave intermediate is a little bit larger compared with the second. I'm still kind of accepting it, if we're definitely rallying from here. If we're not rallying, then I think you can put this fourth wave primary back in here and still allow for a little bit larger correction sideways to the downside, right? But overall, we should continue to trend higher. Actually, we came pretty close to the breakout level of 1422, so I think we've dropped to about 1700. So you could actually say that Ethereum, retested that breakout level, and with a couple of $100 above it, there were a bunch of buy orders, and they didn't let this market kind of collapse lower. Similar story into this blue count, where I'm actually looking at this as being a wave 1 cycle. Makes a little bit more sense, just a 2-year correction, right, in cryptos, Ethereum overall, second wave cycle in here. Then we're starting with the wave 1, down in wave 2, 3, 4, and 5. This wave 1 primary complete, again, it's possible, but it will be a very short wave 2. So that's why it's possible that this move in here, actually it's wave A, right, and we're getting some kind of a complex move here in this wave B, and then another drop lower in this wave C, come down to actually 1400 towards the bottom of the trend line in a wave 2, and then push back up higher. So you can see the message is pretty much, be prepared for some volatility even on the downside, but longer term, I think these counts are pretty explosive to the upside, right? I'm not looking at Ethereum 500. I'm not looking at Ethereum 400 in here. Anywhere above, $1,000 there, 1,200, 400, I think is totally fine. Now, yeah, it could be a big drop, but we got to have some kind of a narrative to kind of get that going. And I think that a bunch of the bad news have been already, we already passed, right? Everything from China, everything, now Ethereum is coming up with a new upgrade. So things are interesting. We'll see what happens. But again, it's a very awkward count here into this fourth wave. I'll show you some smaller time frames, but I just don't, I'm thinking it's going higher. I just don't have a good vibe about, counting this bullish just yet, right? It's just, the only thing is this is maybe a small wave one of these lows. We're looking for a 2 and then a continuation higher. So let's see what happens. On terms of the moving averages, looks a little bit better. We're above the 200 week, above the 50 week. This 50 week actually hasn't been fully tested by Ethereum. And now we're back above the 21 week moving average as well. So this looks a little bit better in terms of its strength. And not retesting some of these deeper moving averages. In terms of the candles, we'll see how we kind of close tonight, but it's a pretty beautiful picture because I was expecting, following this huge doji candle that happened back in April, that this is going to be a much bigger sell-off to the downside and start to get below this 14,000, maybe get towards 12, towards 1,000. And it hasn't really happened. And when that's not the case, that means the market is actually ready to break much higher. So I'm still kind of not fully convinced that that's the case, but that's a pretty nice this is the second month that we're actually squeezing back up higher from those lows. And you can see all the candles, right? They close towards the highs instead of towards the lows. So there's not a lot of pressure to the downside in terms of a closing basis. So we'll see what happens this month. Here is a look at Ethereum Bitcoin cross. So on this one, since we have this equilibrium between Ethereum and Bitcoin in terms of the way they move, obviously this is very well seen into this Ethereum Bitcoin cross. We're still, I think, in some kind of a fourth wave in here, and it actually mimics the Ethereum dollar chart pretty well in terms of the way this fourth wave looks in here. But I think overall, Ethereum could continue to outperform Bitcoin based on this count. So 1, 2, another 1, 2 in here, 3, 4. Let's see if we can get a fifth wave out of here, right? That means Ethereum should rally much faster than Bitcoin. If that's not the case, and that's just another kind of three-wave advance, let's say, to the upside, then we're probably going to get another move lower, and this whole thing kind of becomes just a big mess, equilibrium between periods of Ethereum outperformance, Bitcoin outperformance, Ethereum outperformance, Bitcoin outperformance. It's they're in their own little world for now, right? Ethereum, it's doing a totally different thing than Bitcoin does, and I think people start to kind of get used with the difference between the two. They do have a very, very high correlation, but you're talking Bitcoin, you're talking store of value, you're talking Ethereum, you're talking development, you're talking apps, you're talking DeFi. So it's kind of they're very, very different in that aspect. So we'll continue to watch this, and let's see if we can get above that 688 level. We could probably be on our way a little bit higher in Ethereum versus Bitcoin. And a very interesting feature. So you guys, the software that I'm using for for all my counts, right? This is what I love, and I'm using MotiveWave, and it's an awesome. It takes a little bit of time to get used with it, but it's not complicated. If you're if you love Elliott Wave and you want to have all your counts saved up, and if you want to switch between them and have automatic levels be plotted, without having to kind of do a lot of work, I can go over counts very, very quickly and adjust them super fast, and it cuts a lot on my time. So that's why I love Elliott Wave, and actually, there is a feature on the Elliott Wave where you can actually sync your charts to my charts, and it's an awesome feature. Some of the members into our program actually have it, and you would have to get MotiveWave software, and be a subscriber to Elliott Wave Cafe to kind of get this feature. But it's awesome because all these counts here, that at least the ones that have the stars, I have about 20 or 30 counts, and this is coins that we're following all the time into our pro room, right? And we talk about them into the video updates and questions from the guys in the pro room. But all these counts, you can have them automatically linked to your MotiveWave software, so you can see every time I'm doing a count into the room, or I'm adjusting them at night or something, automatically appears, and you get a notification from your Dropbox that, hey, Chris modified the count, and take a look at it, see what happens, see what he thinks, where the moves are, and kind of how do I plot the charts, and then you can kind of go back and have your own charts as well in let's say in a separate file, and then you can kind of compare the two, see how you're doing, how I'm doing, and then it's an awesome feature. I mean, I love it, and I think it really speeds up your learning process. So again, give us a try, 7-day free trial, no card required. Come and check us out. There's also a course in there that you can spend time and learn about Elliott Wave, with the 1 month subscription. So anyway, long story short, guys, I love you all. Thanks for subscribing to the channel. Thanks for continuing to come back. Let's stay bullish on this market. I think it's awesome. If you're going to get sell-offs, those are nice opportunities. Make sure you don't leverage. Make sure you're patient. Make sure you're spending time in markets, watching the charts. Don't be super aggressive. This takes time, and then as you get better, one day the light bulb goes on, and you're gonna be very good, and you're gonna understand these markets much better as time goes along. You just got to allow time for yourself to grow, right? That takes time. You don't become, let's say, good at reading markets and price actions overnight. It takes time, but good luck, and I'll see you guys in a couple of weeks, and I'll look forward to the some other videos here into the YouTube channel. So thanks a lot. Bye-bye.